This one, obviously the client wanted us to just keep the address, but you guys requested it. So obviously this is zip code 21217, and we can start getting an idea approximately on values. Again, the historical data in this particular market, the 5-year growth, how we see that. Again, the numbers aren't gonna be too substantial. When we scroll down for comparables, again, now we can get a better visual of the comps in that marketplace based on the subject property so that we can gauge it. This is what the report looks like in PDF. So we're able to really get a good picture of what did it list for, what did it sell for, and you'll start getting some visuals here. Like for example, I don't know if you've noticed here, most of the transactions here listed at a certain number, most of them sold for less. So those are little things that our team would look at and say, hey, just an FYI, I know you're thinking this isn't a value of whatever, $380,000, but the last couple deals that I've seen went for $370,000. Well, the reality is they sold for less. So just keep that in your anticipation, because it appears that these markets are having slightly, some issues. We look at recent similar comparable sales as well in the last 4 years, just a year or so, just to get a picture for what's happened. We look at active deals on the market as well in that area. Why? Because I want to see days on market. Here we go again. See this? We can start looking into individual deals to find out, why are these properties not selling? Is it just that somebody's completely overpriced, or is this something that I need to worry about when I buy this property? So again, these are the tools that we try to leverage to really get the historical data of what's traded, when it traded. Are we seeing the trend going up? Does the property conform as far as living square footage, as far as the site area, and also the bedroom counts? So this will be on the higher end of the back of the bucket here, but again, it's still conforming. If you were telling me 9 to 15, I'd be like, I don't know, we're getting the big house in the little community, probably not a good deal to consider.
Right.
And lastly, again,
in any market.
Exactly, absolutely. So here's this one. What you'll notice here is, remember the last one, it was still technically a seller's market. Notice how this market already is neutral based on the data we're seeing here. So obviously transactions have slowed down, which is interesting to see. And then the risk has gone from 15% to 25% from the same time last year. So again, those are things that I want to know. It's still technically relatively low that this market will collapse, but again, it's a neutral market. So that means we have to be way more aggressive and more conservative on our exit strategy if we're planning on selling the property. And then again, here's another one. This is another one in California, 94518. Same thing. Look at this historical data showing graphs, average in California, average price. So you can see the differences here. And I'm just going to scroll down. I think by now I don't have to show you about comps. You kind of get what I'm looking at. But when we get to this analysis, look at the risk here. Notice how technically it's still a seller's market, but it's dropping. Days on market is growing. And look at the risk. It's starting to transition now almost into the yellow. So again, telltale sign, this market might be way overpriced. And little by little, this might have a bigger impact in this market, for instance, than it would in the Tampa market, which we just looked at. So again, I wanted you guys to see this as more of a modest. These are the pieces of information that we use in our preliminary research to determine what we need to do to this deal, or how conservative we need to be when we face the project. And so again, it's just tools and resources that we want to share with you. We want to teach you and show you what we look for. But as an investor, guys, it is imperative. You can make money now, but you have to be wise with the activities that you're going after. And one last point, John, if I can make, that I tell people here on this stuff is, when you're going to go raise money or bring a partner that's going to become your partner, or you're going to a lender, if you spend the time to really analyze your deal and you know it's a good deal, it's not a money issue. You're able to come to them with a professional presentation. They see the value. They see that you've thought this through. That's how you sell an investor. I mean, think about it. If you brought this to me and you showed me why the risk, how you're hedging it, with all the numbers tied to it, I'm going to be 10 times more open to working with you and giving you that money than if you just send me an email and you say, hey, check this deal out. Tell me what you think. Do you see what I'm saying? So again, as you guys are presenting this business to your clients or your investors, as you're trying to do these deals, do your due diligence. Really put something together that will show the investor that you're trying to protect their money and that you want to make sure that you guys are going to make money on those deals.